In chapters 7 and 8, we were looking at how costs flow through a job order system or a process system. And we found that some costs were very easy to track because they could be traced. Those costs would include direct materials and direct labor. And the reason we could trace them is that they have a paperwork trail that lets us know how much of those costs go into the various products that we are manufacturing. However, we found that some costs, overhead costs, could not be traced. There was no direct way to determine how much of those overhead costs went into the various things that we were making. So we allocated those costs. This chapter discusses various ways to allocate overhead costs. And it's a very important issue for a couple of reasons. Number one, as manufacturing has become more mechanized, more machine dependent, the proportion of overhead costs compared to direct costs keeps increasing. And that means that it's more important for us to understand exactly where those overhead costs go. The other issue is that this is what's called a zero-sum game. That means our overhead costs are what they are. And if we give too much overhead costs to one product, that means by definition we will end up giving not enough overhead costs to another product. Therefore, we will end up misunderstanding how much both of those products cost us to make. So let's take a look at some ways to allocate overhead costs and try to come to an understanding of how to choose among those methods. Let's say we have a firm. Rev 'em Up makes outboard motors in two departments, a machining department and an assembly department. And the firm has collected a bunch of data for the year for its three products, alpha, beta, and gamma. So what kind of information do they have? We know the number of units of each kind of motor the firm has made individually and in total, and we know how many machine hours it took to make each kind of motor, and we know the cost of the direct materials that went into each kind of motor because we can trace those costs, and the same thing for direct labor. But we also have a significant amount of overhead in our two departments. Some of the overhead belongs to the machining department, some of it belongs to the assembly department, and we don't have any good way to decide how much of that overhead belongs to each type of motor that we manufacture. We also have some more information that might be useful to us. Here we see that we made 25,000 of the alpha version of our motors, and that it took a total of 2,500 machine hours to do that. This suggests that it takes about a tenth of a machine hour to make one of these motors. We can do the same thing for beta, and we find that it takes about a tenth of a machine hour to make each unit. However, we only made 5,000 of the gamma motors, yet it took us 2,000 machine hours to make them. That means each gamma motor is consuming more of our factory resources to make. Let's see if we can use that information to understand how much overhead should go into each version of our motors. RevEm has decided to use machine hours as the basis for allocating its overhead. So it made a predetermined overhead rate where it took the total estimated overhead cost divided by the total amount of the allocation base machine hours to get an allocation rate. In this case, they had a total of $1,350,000 of overhead, and they had a total of 6,000 machine hours. That was given on the previous slide. When we divide that out, that tells us give $225 of overhead to any motor for each machine hour that the motor consumes. In other words, we believe that motors that use more machine hours deserve more overhead costs. Let's see how that works out. We can take the number of machine hours used for the alpha motors, 2,500 machine hours, multiply it by our allocation rate, and that will tell us how much overhead to assign to these motors. We can do the same thing with the beta motors and the same thing with the gamma motors. Once we've done our allocation, we can add our manufacturing costs for each kind of motor. Add the materials, the labor, and the allocated overhead for alpha. And then we can divide by the total number of alpha motors produced, and that gives us a cost per motor. In this case, each alpha motor is costing us $77.50. For the beta motors, we can add their materials, their labor, their overhead, and we get a total. Divide by the number of beta motors that we make, and that will tell us how much it cost us to make each beta motor. We can do the same thing with the gamma motors, add up the materials, the labor, and the allocated overhead, divide by the total number of gamma motors, and that tells us that each gamma motor costs us significantly more than the other two models, which kind of makes sense. However, the cost accountant at RevEm is thinking that maybe a single plant-wide allocation rate is not the best method to answer the question, how much does it cost us to make each of these motors? Instead, the cost accountant is thinking maybe the firm should use departmental cost allocation. The idea is that the different departments have different cost drivers, and because of that, it might be important to assign machine department costs in a different way from assembly department costs. A departmental system is a two-stage method for allocating costs. In the first stage, somebody has to pool all of the overhead costs by department. In real life, you might have to do it if you were the firm's cost accountant. In a homework problem or an exam problem, somebody will have to tell you how much cost is in each departmental pool. Then, In the second step, the cost from each pool has to be allocated to the cost objects, in this case motors, using the separate allocation rate for each department. So let's compute the allocation rates for RevEm. In the machining department, the cost accountant feels that machine hours are the right way to allocate these costs. So the predetermined overhead rate is going to be the total machining department costs divided by the total number of machine hours. And that creates a rate, $150 of machine department overhead per machine hour. In the assembly department, the cost accountant feels that labor costs would be the most appropriate way to allocate these costs. So we go back and look how much labor costs are there, divide that into the total assembly department costs, and that gives us a rate. In this case, 0.6667. We can interpret that as about 67 cents of allocated assembly department overhead per dollar of labor costs, or we can interpret that as assigning 66.67% of labor costs to each job as that job's share of the assembly department overhead. Let's see how this system works out for RevEm. We already know the direct materials and the direct labor costs. Those are traced, they're not affected by our allocation method. We need to think about the allocated overhead. Now, since we have divided our overhead into two separate pools, one pool for the machining department and one pool for the assembly department, we're going to have to do twice as much math. But that's okay if it gives us a better sense of how much it costs to make each version of our product. So, in the machining department, we're going to take the number of machine hours used by the alpha motors and multiply it by our machining department allocation rate of $150 per machine hour to determine the alpha motors' share of machining department overhead. We can do the same thing for the beta motors by multiplying the number of machine hours used to make the beta motors times the $150 per machine hour allocation rate. And we can do the same thing for the gamma motors. In the assembly department, we're going to take the total amount of labor costs in assembly, multiply it by our 66.67% allocation rate, and that tells us that since the alpha motors use $375,000 of labor costs, those motors are going to be assigned $250,000 of assembly department overhead. We can play the same game for the beta motors. We can play the same game for the gamma motors. Do you see the story here? In the assembly department, what we are saying is we believe that products that use more labor dollars deserve more overhead from the assembly department. If that's not a true statement, then we have to find a different model. But the cost accountant in this case believes that this is a reasonable explanation of how overhead costs are consumed in this department. Now that we've allocated all of our overhead, all we have to do is add up materials, labor, machining department overhead, and assembly department overhead for the alpha motors, divide by the number of units produced, and that will tell us, under this model, each alpha motor cost $80. We can do the same thing for the beta motors, add up their materials, labor, and the overhead from both departments, divide by the number of units, and that tells us that in this system we understand beta motors to cost us $70 each. We can do the same thing for the gamma motors, add up their materials, labor, machining department overhead, assembly department overhead, divide by the number of motors, and that tells us that they cost us $140 per unit. Here's the problem. Nobody knows which method is correct. It is unknowable. If we knew for sure how much overhead belonged to each type of motor, we wouldn't bother with allocation. But we don't know that. Instead, we're trying to construct a mathematical model that will help us to understand how much overhead belongs to each product. And the penalty for choosing a model that is not a good representation of what is actually happening in our firm is we won't understand how much each product costs us to make. And because of that, we're likely to misprice our various products, and we're likely to mismarket them. It takes an understanding of your firm. It takes an understanding of how much each of these products absorb of our overhead costs in order to construct a model that's a reasonable reflection of what's actually going on in the firm. And that's what makes cost accountants valuable. Unfortunately, the penalty, if you choose the wrong model, is your firm's not going to be as profitable. Let's take a look at a practice problem. Toyland Stores has a personnel department, and that personnel department does work for both the sales department and the administrative department. The sales department has 12 employees, and the administrative department has 3 employees. Altogether, the estimated overhead from personnel is $45,000, and this is going to be allocated to each of the user departments, sales and administration, based on the number of employees. So my question to you is, how much personnel department overhead is allocated to each user department? Let's take a look at the solution. $45,000 of personnel department overhead divided by a total of 15 employees, 12 from the sales department and 3 from the administrative department, gives us an allocation rate of $3,000 per employee. Since the sales department has 12 employees, they are going to get $36,000 of the allocated overhead. The administration department only has 3 employees. It will receive $9,000 of the personnel department overhead.